Sanmanani Dumilan, good evening and welcome to episode 394 of the Private Property Podcast. I'm your host, Mfundo Kumalo. It's a Monday edition of the Private Property Podcast as we kickstart the week this evening. I know we're later than we normally are, but you're going to find out in a little bit why we absolutely could not cancel this show. It's an episode that I'm very excited about. I know some of you at home have also been calling for it. And if anything, it's probably stayed on brand. Us being late this evening has stayed on brand with the topic that we are covering this evening. And I'll tell you all about it in a moment. But as usual, I love talking about the other great shows that you can look forward to across our social media platforms. It's a Monday, so you can catch Chad on the Home Shoppers Show, and it comes to your screens every Friday at 8 p.m. as well. Every Tuesdays and Thursdays, Umbali Nwako brings you the Farming Podcast, tackling all things agriculture. And on Wednesdays, you can catch SC Clarkson looking at the First-Time Home Buyers Show. And of course, one of the other great things that you're going to find on our social media pages, besides the incredible shows that we bring you to your screens, is the great competition that we're currently running, where we're giving away 500 rands in cash every single evening. And all you have to do to stand a chance of walking away with that cash prize is to share with us some of the expensive property knowledge that you have picked up while watching the shows. Share it on the pinned post on our social media page, particularly on Facebook, where we've received over 6,000 comments on that specific post, and you stand a chance of walking away with the cash prize. And if people, or rather if the person who we call out on the show doesn't raise their hands, drop us a text to claim their prize, then of course it rolls over and the money bag keeps getting bigger and bigger. Well, that's what you can look forward to a little later on in the show, later than we normally do. But to kickstart a conversation that I said we've all been waiting for quite a long time, I know you at home have also been asking for it. We're looking at collective buying, which is of course a great offering that is also offered by FNB. We saw it coming onto the market a few weeks ago, and joining us this evening to give us a good sense of what this product that FNB has put on, how it actually works. Because I know when it came on, so many of us had so many questions about it, what to look out for, and of course, what are the potential downsides, if any, that you should be aware of. I'm joined this evening by Dr. Mfundo Mabaso, who's a growth head for middle market segment at FNB. Dr. Mabaso, good evening, and thank you so much for joining us on the show.
Good evening to you and to your viewers. We are humbled that you've been invited to come to the show tonight. Thank you.
I jokingly said that us starting late this evening is very on brand with the topic that we're looking at, because we also know how Stokvels tend to go. I think more often than not, Stokvel meetings have a tendency of starting later than they are. This time of year, we know that it's a time of year where we deal a lot with Stokvels and money Stokvels and things running behind schedule. So I think more than anything, we're on brand with talking property Stokvels, and of course the show is starting as late as it has. But without wasting more time, I think one of the big things is, firstly, for those who perhaps may not have already heard about it already, what is this new collective buying home loan sort of facility, as it were, that FNB has brought onto the market?
Thank you so much for the question, and to the viewers. The collective buying offering is actually not even new. It's an offering that we've always had at FNB. It's just that we haven't necessarily gone out to market it. We've had it for a number of years, but what it essentially does is it provides an opportunity for a number of people to be able to buy together the same property. You can accommodate up to a maximum of 12 people. So imagine a family buying together one property. It could be siblings coming together with their parents. They could buy a home, for example. Or it can even be friends, coming together to buy the property. It can be an investment property, something like a holiday home, that can be used for, you can rent it out, for example, or it can be a primary residence where you can stay in it. The advantage of this is, since you've got a number of people coming together, as I've said, up to 12 people, you are able to enhance or improve your affordability, your ability to qualify, because now you are taking into account a number of incomes from the different people who are buying. So it increases affordability, it enhances affordability, or it makes it easier for the people to qualify for the property because you are using a number of sources of income and you are sharing the expenses that people have. As you know, typically a person will have monthly income, they will also have monthly expenses. So you're sharing all of that, then it makes it much more easier to qualify.
And you know, so I think one of the key things when I even looked through, a particular offering is firstly, and you've already touched on this, that it could even work, for instance, for a family. And we certainly get it in the context of a family and why 12 people. I'm interested to find out whether it was something that was actually positioned for property stokvels in particular, or it is something that's geared more towards, for instance, the example that you've said of, a family where you really do want to share in the costs. And I think sometimes the familial ties or actually property stokvels, because we also know for the most part, stokvels would typically be slightly more than 12 people.
Yes. Yeah, so basically, the nice thing about this offering is we've not limited it for stokvels. It is actually open for any group of people that can come together, including stokvels themselves, or friends, or colleagues, or family, or siblings, or whatever group of people. It can even be, for example, a trust. So it is open. We've not limited it to stokvels in particular. Stokvels can participate by all means. Friends can participate by all means. Colleagues can participate. Family members or siblings can come together. So it is basically open for any group of people that may want to come together. The most important thing is to have a bank account that can be opened, an FNB bank account, where the 12 people can make sure that there is sufficient funds on the date that the debit order is supposed to go through. So let's say, for example, if the debit order goes on the 31st or last day of the month, 30th or 31st, then the 12 people have got to make sure that there is sufficient funds in that account. So it doesn't matter that the people could be paid on different dates within a month. You could have, for example, one person or some people being paid on the 15th, they transfer money into that account. Some could be paid on the 20th, they can transfer money on that same account. Some could be paid on the 25th of the same month, they can put money on that account. And those who are paid on the 30th or 31st, they make sure that there's money in that account. So the debit order can go, let's say, on the 1st of every month. So any group of people can participate on this. It's open to all, but the most important thing is that single debit order must be able to go through on that account that is dedicated for the mortgage on the date that is agreed, let's say the 1st of every month as an example.
And that particular account wouldn't be one individual's bank account as we typically would have in our normal home loans if you have it with yourself. So it will essentially be, we'll say, that special account where we're all respectively depositing our money. Is that correct?
Yes. So a simple check account or savings account, the normal account that an individual can open, can work. So the 12 people can agree, for example, to say, Zama, we nominate Zama, we'll use Zama's account, and then obviously your account number then is shared amongst the people, and then they use that normal account, normal check account or debit order account or savings account or transactional account, as it is called in the market. That will serve the purpose. Yes, correct. Thanks.
Mm-hmm. We are this evening in conversation with Dr. Mfundo Mabaso, who's a growth head for middle market segment at FNB, looking at collective buying and, of course, some of the pros and cons, what you need to look out for in the event where you want to use this facility as a group. We're seeing some of the love that we're already getting on our social media page there on Facebook. Happiness Maluleka watching, Anelda Everton watching, Michelle Beaumarant, Christine Dichaba, Ugo Solfumelo, and sending those green hearts. Do keep them coming. I also see some of the questions and comments. I want us to go for a quick break, see who the lucky winner of the money that we've got in the money bag. I think we've got 1,000 rands, if I remember correctly, in the money bag in the competition that we are running. And when we come back, we'll be taking your questions and comments, and also, of course, looking at the risk that you ought to be aware of if you want to use this method of home ownership. But in the meantime, let's have a look at who the lucky winner is. And that lucky winner is Ayetu Mayekiso. Congratulations to Ayetu Mayekiso, standing a chance of winning that 1,000 rands that is in the money bag. Congratulations to you. Remember, all you have to do to claim that prize money is to drop us a text down here below in order to claim the money. Continuing our conversation, looking at collective buying with FNB. We know a lot of you have asked for us to bring them on the show because you wanted to get a sense of how this facility works, whether you, of course, can use it as a collective, and some of the things you ought to look out for. We've got a question here from Christine Dichaba asking, what's the maximum amount? And this would be the maximum amount for the actual facility. So is it, 3M, for instance, maximum, or is there a maximum amount at all for this particular facility?
Yes. Oh, thank you so much for the question. So there is no limit or ceiling. What will inform the amount is the affordability of the customers who are buying the property. So you can purchase any property that you can qualify for. So typically, just to give an indicative guideline, so of the total income, gross income put together, you normally work on about 30% of that income. So let me give an example. Let's say if this was 10,000, the income that we're talking about all together. So then the installment that you're looking at per month would be about 3,000 rands as an example, right? So there's no limit as to you can buy only for a property of this house price. As long as you can qualify, the affordability is there and you can be able to pay for the property. Obviously, we are guided by the NCA, the National Credit Act, in terms of regulating lending, where we should lend responsibly, that we give customers a credit facility that they can qualify for, that they can afford comfortable and be able to pay. Remember, there are additional costs when you buy a property. It's not just only the monthly installment. You also have property rates and taxes that you pay to the municipality, for example. So customers or consumers must be aware of that. There's also insurance, your homeowners cover insurance, which covers the geyser and the structure itself, the property itself, in the event that it was to be on fire, for example. Then that homeowners cover will cater for that fire or geyser replacement. And then there's also credit life, which is life insurance in the event of death, for example, and then the policy will pay. So I'm just highlighting that there is additional costs, not just only the monthly installment that the customers must think about, but there's no limit as to how much value of a property one can buy for as long as the affordability is there and they qualify for it. I hope that clarifies.
It definitely does clarify that component. I think another one to piggyback off that question is whether this facility is for financing residential properties only, or if there are people who want to, for instance, are eyeing a commercial building or a different kind of building that's not a house or an apartment, is this a facility that they'd also be able to use? I mean, I'm thinking of, let's say, young professionals, for instance, who know that their affordability muscle would be quite significant. So they're not even doing it from they're not going to be able to afford to buy a home, but rather looking at, accessing a bigger type of property class that they wouldn't be able to access in their individual capacity. Is that an option that would be available for them?
Yeah, so I think for the purposes of the offering we have, we're focusing on residential property. So we're talking about a house, or it can be a townhouse, So for all intents and purposes.
So we're definitely not looking at a block of flats. I mean, it's still residential, but it's obviously not, one unit. You want to buy the whole building effectively.
We can look at a block of flats as well. Okay. That is also part of the offering that we do at FNB, what we call CPF, commercial property finance. You see, so for as long as it's residential purposes, it's not for office building of office accommodation, or it's not for industrial purposes, solely for residential purposes. Definitely townhouses or town complexes do qualify for this offering. Yes.
Mm-hmm. And taking more of your questions and comments at home this evening as we look at the collective buying offering by FNB, we've got Umatha Shingange on Facebook asking, so what happens when I want to cancel my portion of the bond? When you actually get to a point where it is 12 people that have signed up for this particular bond facility, what happens if one person wants to pull out or more people want to pull out? How would the logistics of that effectively work?
Sorry, Zama?
So I was asking, this is a question from Umatha Shingange, who had asked, so what happens when I want to cancel my portion of the bond? So if one of the 12 people, ended up being 12, want to cancel perhaps more people, what are the logistics of that cancellation?
Yes, so this is very important, the question that's being asked. So within the contract, or what we call the mortgage loan agreement, there will be a clause there where you can actually have an exit, right? Or we can have a replacement. So we can replace Mpiwe with Zanele, for example. That is easy to do. The most important thing is we've got to make sure that the contribution that Zanele or Mpiwe was paying is there. So if I was contributing, let's say 1,000 rands, right, towards repayment, so we can have an arrangement where I'm replaced by someone else. The most important thing is that 1,000 rands must be there, and the installment must be sufficient on that first day of the month when the rental is supposed to, the installment rather is supposed to go through. There must be sufficient funds there. So we can make a replacement for each person. There's flexibility on that, but it's important that we make those arrangements when we draw up the contract, right? Mm-hmm. Take, for example, in siblings, someone might decide, let's say they get married, for example, their situation changes in terms of their life. But if it's a family home, and they can have an arrangement where maybe someone else replaces them, or even if it's friends that bought together, circumstances change, there can be a replacement, or colleagues, there can be a replacement. But the most important thing is to make sure that that contribution is sufficient and it covers the installment. And on the day that we have agreed on the contract, let's say the first of every month, that those funds are available there. So by all means, there is that flexibility to do that.
We've got another question here coming through from Christine Dichaba, also on our Facebook page. Do keep these questions coming, and she's actually said quite a few of them. This question is, if you want to buy another property, does this property affect the future purchases? Let's say you get married. And then I think the nature of this question is, if I'm one of the co-signers of this particular facility, and arguably there's 12 of us, I am theoretically, or to our understanding, my affordability is affected in terms of the 12 and I still have the rest of my affordability, does signing up for this affect my overall affordability in the context of I'm only liable here for this 12th, or obviously liable for a bigger portion? So what happens if your situation kind of significantly changes and you're one of the 11, if you obviously end up being 12 people who have signed up for this particular facility?
So your affordability will not be negatively impacted. This collective buying is not any different to any other credit facility that you have ordinarily. Like even if you had a house and you were two people owning the house, co-applicants, or even if you're a single applicant. So the same principles in terms of lending, in terms of credit, they apply. So you will not be negatively impacted, right? So the same sort of policies, procedures, legislation, if you like, or regulations of the country in terms of NCA by the National Credit Regulator, for example, NCR, they apply the same way. So this doesn't get treated any differently. You will not be disadvantaged in any way. I hope that is clear in the way I'm responding.
It definitely is. And getting to more of the questions from our viewers at home, we've got Mfundo Mabaso on Facebook asking, does this loan have mechanisms to help ensure that equal or proportion payments within the parties are involved? So I think people are still struggling to understand the mechanism. I mean, when we have our normal bond facility, you know that if it's 5,000, it's 5,000 coming from you. Usually when, you co-buy with your spouse, it would come from one person's sort of bank account. So they're trying to get a sense of whether or not, and I see we've now lost my guest. We were having a few technical issues with him in a moment, so we will get him back shortly, because I know that this is one of those things that many people will want to explore as much as possible and weigh up their options, see if it's something that they want to dip into, especially when you perhaps look at buying a bigger portion of a property, or of course, as my guest said earlier on, if you want looking to have a family, and as a family you may want to buy perhaps a family home, and you may already have your own respective homes as individuals, and now looking to have a family home that you equally pay. So I think the question of the mechanism and how that effectively works is something that's quite important, and will certainly pose that question. Christine, I do see your comment there saying, when they sell, it's another issue, the selling process, clearing municipality, etc., managing agents, etc. Look, I think one of the realities of collective buying in general, so even if it's with your spouse or perhaps two other people, is that the moment you want to sell, so many people, obviously everybody has to sign. So that does tend to be a bit of an admin nightmare that I'm sure you'd want to address very effectively. And I think that's something that I would also like to find out, if there are mechanisms where perhaps a power of attorney is given to one party, where they'd be the ones who effectively handle some of the decision making of the property, and whether that is something that is available within the context of this particular facility. But we are having a few technical issues with my guest. What I can already actually promise is that we're going to bring back F&B on this topic, because I can see the questions that are coming through from many of you at home, and I know that you want these answers. You have, of course, asked for us to bring them on the platform, because it's one of those products that you certainly have an interest in, working through and understanding, to also see if it's perhaps something that you want to explore. And I also see that we are running out of time and getting closer and closer to when we have to have Chad on. But I see my guest has been able to, quickly come back on. And I think that's the last question that we'll probably pose to him. We'll put these last two questions that we found from you at home. And then, of course, I'm already promising that we're going to have a repeat, not even a repeat, a continuation, where we take more of your questions and comments at home. I just want to check, Dr. Madigizela, if you are back with us properly. I know that your audio is on, but I saw that the video wasn't on. So just want to check before I wrap up instead, and perhaps have you back another day, just to check if you are indeed with us.
Yes, I'm with you.
Perfect. I think I'll ask the last. So that last question from Mfundo Mabaso was, does the loan have mechanisms to help ensure that equal proportional payments within the parties involved? So that's where we had just gotten cut off.
Yes, no, apologies for that. So basically, remember, it's going to depend on the income of each person. So within the 12 people, one person could earn 10,000 rands, right, the gross income, right? And the other person can earn 5,000, half of the other one. The other person can earn 7,000. So it will always be in proportion with your income, with your affordability. So it will be your 30% of your gross income per month. But collectively, when you put it together, it has to give us that monthly installment for the property that you've bought. So it may not necessarily be the same amount, because unless it so happens that all the 12 people earn the same amount of money per month, but the amounts can differ depending on the income that the person has, right? So indicative is that 30% of your gross income, which will be your contribution. And the other person who may earn double your income will then contribute more and not necessarily the same amount. But because it's one single installment that the bank will take on the first of every month. So if, let's say, for example, the repayment is 10,000 a month. So 10,000 a month is what will be deducted from that one account. But the 12 of us, we could contribute different amounts towards that 10,000. One person could pay 1,000 rands. Another one could contribute, let's say, 700 rand. Another one could contribute 500 rand, right? Another one could contribute 300 rand. It depends on what you earn, but all together is that 10,000. I hope it is clear. So it will always be in proportion with your income, and the indicative figure is about 30% of your gross income per month.
I'm going to squeeze in this last question from Tiatu Munyai coming through from our YouTube page, asking what happens when one of the 12 is not paying anymore. So in the event where one of the people defaults or is unable to meet the financial obligation, what then happens in those instances?
So it's similarly to the stokvel that you asked about earlier. Remember, in a stokvel, the members must communicate with each other, right? Because we are jointly liable for this installment, all of us, the 12 of us. So the communication is important amongst us. So if I'm encountering difficulties as one member, let's say, for example, I'm losing my job or my situation changes in terms of the income. So I need to be able to communicate with the other 11 people if we're 12, or if we are 9, the other 8 people, or if we are 7, the other 6 people, right? I must communicate with them and take responsibility so that we make a plan to make sure that my contribution is still met, is made. I can't just abdicate my responsibility, because remember, you sign an agreement and you are legally bound by the agreement, because this is a loan. So you're supposed to service the loan. That's like you do with any other loan, even if you are alone or you are 2 people. So the same principles apply. The affordability must be there. So part of the education, because I think the important aspect is the education. We do what is called borrower education at the bank, at FNB. For all the bonds that we do, before we register the bond, we take every customer through borrower education to explain what your responsibilities are, what your obligations are, what is the importance of paying on time, because that's going to impact the credit profile of the person, the customer, if they don't pay. So it's important that there is communication, but the education plays a very important part in this offering, because it's relatively, let's say, new in the market, although we've always had it, but because now we are marketing it and we are exposing it to the market. So education is important. Communication amongst the people who are involved is also very important, because it's a loan, it must be serviced, it must be paid by all the people involved.
Dr. Matikizela, we're going to leave it there. There are still quite a few questions and comments coming through from our viewers at home, but we have unfortunately run out of time. What I will do, I'm promising them that we're going to have somebody from, whether it's yourself or somebody from the FNB team, back on this topic. And this time around, we're going to be on time. We're not going to be like the usual Stokvel meeting where we run over. And I can already see that we ran significantly over, but thank you so much for joining us this evening. We're certainly looking forward to having more engagements with the F&B team on some of their offerings. Thank you very much for joining us this evening.
We commit from F&B. Thank you for the opportunity. We're going to make ourselves available and have more sessions and answer all the questions that our viewers are having at home. Thank you so much for hosting us, and may God bless you. Thank you so much.
Thank you very much. And that is Dr. Mfundo Mabaso, wrapping up that Monday edition of the Private Property Podcast with myself, Mfundo Kumalo, talking collective buying. And of course, that offering that they're heavily marketing, as Dr. Mabaso mentioned, it has been in the market, but they're putting more work behind it. And bioeducation is going to be so important. And that's why a platform like our show becomes very crucial. We were able to ask these questions to the various decision makers and the different people in the financial institutions, so that you don't sign up for something that you are unaware of or don't properly understand. Well, one of the great things about this Monday is that Tumayekiso did raise their hands and dropped a message signaling that they're here, and it was actually 1,500 rands that was in the money bag. So congratulations to you, to walking away with that 1,500 rands. That means we're back to 500 rands in the money bag for tomorrow evening. Well, that's it for myself as Mfundo Kumalo. Late, but we're never, of course, too late, especially when we talk all things property. I'll be back on your screens tomorrow evening at 7 p.m. Do get gear up for Chad on the Home Shoppers Show at 8 p.m. Till then, hoping you're staying home and staying safe.